The mortgage secrets banks don't want you to know in 2025. So let's talk about mortgage. For most people, a mortgage is the single biggest financial commitment of their entire life. But here is the thing nobody tells you. The way you approach your mortgage can either set you free or trap you for decades. The banks, the brokers, the flashy advertisements, they all want you to think that a mortgage is simple. You borrow, you pay, end of story. But in reality, mortgages are full of hidden traps, secret strategies, and opportunities that can save you tens of thousands of dollars if you actually know how the system works. And that's exactly what we're going to uncover today. The 7 secrets, strategies, and insider tips that could change how you look at mortgages forever. By the end of this video, you'll know how to avoid the biggest mistakes, how to protect yourself from rising interest rates, and how to leverage the banking system to work in your favor. Trust me, this is knowledge that most people never get, but you can use it to save thousands of dollars and build long-term wealth. So stick around. Now, let's start with the basics. The first thing you need to understand is that interest rates are not the full story. Everyone obsesses about whether their mortgage is 3%, 4%, or 5%. Sure, that matters. But what really matters is the total cost over the life of the loan. A 30-year mortgage at a low rate can still cost you far more than a 15-year mortgage at a slightly higher rate. Why? Because of compounding interest. Banks know that most people will focus on the monthly payment, not the long-term math, and that's where they make their money. Here's a secret strategy: paying bi-weekly instead of monthly. If you simply switch your payment frequency, you're essentially making an extra full payment each year without even feeling it. That single adjustment can shave years off your mortgage and save you a fortune in interest. But most lenders will never tell you this up front because it cuts into their profit. No. 2. The trap of a lifetime. Now let's talk about something nobody else mentions: refinancing. Refinancing isn't just about chasing a lower interest rate. It can also be about restructuring your debt in a way that aligns with your financial goals. Maybe you want to free up cash flow to invest in real estate. Maybe you want to consolidate other high-interest debts into your mortgage at a lower rate. Or maybe you want to shorten the loan term entirely. The timing of refinancing can be the difference between building wealth and staying stuck in the paycheck-to-paycheck cycle. And if you're wondering how much you can save by refinancing, check out this amazing tool. We've partnered with an amazing company to create a quick calculator that shows you exactly how much you can save with different rates and terms. No personal info required. Just plug in your numbers and see the impact instantly. It's eye-opening stuff. But here's the catch. When you refinance, there are costs involved. Appraisal fees, title searches, closing costs, and you don't want to lose money in the process. So there's a sweet spot when it comes to refinancing. You need to weigh the potential savings against the expenses of refinancing. And that decision hinges on a few key factors, like the current interest rates, your remaining loan balance, and the fees associated with refinancing. Number 3, mortgages designed for investors. Did you know there are mortgages designed specifically for investors that the average homebuyer never hears about? These products can allow you to leverage rental income to qualify for bigger loans or use creative financing like interest-only periods to maximize cash flow. In the right hands, these are powerful tools. In the wrong hands, they can be dangerous traps. The point is, mortgages are not one size fits all, and the smartest investors use them as weapons to build wealth, not just as a way to buy a house. Number 4, the illusion of national rates. Everyone focuses on the national interest rate, but that's just the starting point. Your personal credit profile, your debt-to-income ratio, and even the lender's appetite for risk in your specific zip code can influence the deal you get. That means 2 people with the same salary buying the same house might walk away with totally different mortgage offers. And that's why shopping around isn't just recommended. It's essential. 5. You can negotiate your mortgage. Here's something nobody tells you. You can negotiate with banks. Yes, even on mortgages. If one lender offers you a slightly lower rate, you can take that to another lender and ask them to beat it. You can negotiate fees, points, and even closing costs. Most borrowers don't do this because they're intimidated, but the people who do often save thousands. 6. Lifestyle inflation. This is the unspoken truth. Banks want you to live large. They'll approve mortgages that stretch your budget to the limit, encouraging you to buy that fancy car, upgrade your kitchen, take that vacation. But every dollar you spend on those things is a dollar you don't have to pay back. Lifestyle inflation is a silent killer of financial goals. It keeps you trapped in a cycle of spending, borrowing, and trying to keep up with a lifestyle that doesn't truly bring happiness. Remember, you don't have to max out your budget just because you can. If you can afford $1,000 a month for a mortgage, consider spending less. Cut that monthly payment down to, say, $800 a month. Now you're making an extra $200 every single month, and you can use that money to do whatever you want. You can save, you can invest, you can pay off debt, or you can enjoy a more modest lifestyle without the burden of huge payments. It's your choice. 7. Mortgages are not forever. It's easy to get sucked into the mortgage mentality, but remember, a mortgage is a tool, not a master. Use it wisely, and it can help you build equity, provide leverage, and open doors to real estate investing. But if you let it control you, it can keep you locked into financial obligations for decades. Your mortgage doesn't define your freedom. You do. Every single month, look at your mortgage statement. Understand what you're paying, what's going towards principal, what's going towards interest. And if you don't like what you see, do something about it. Ask your lender about options like interest-only periods or changing your repayment schedule. You have more control than you think. Now, here's the bottom line. The banks want you to think that mortgages are complicated, confusing, and only for the wealthy. But that couldn't be further from the truth. Mortgages are one of the biggest financial tools available to the average person, and they can be a springboard to creating generational wealth if you know how to play the game. We've uncovered just the tip of the iceberg today. There are dozens of strategies and techniques that the banks don't want you to know, and we're committed to bringing them all to light. Make sure you subscribe. If you want to stay in the loop and get ahead of the curve, you don't want to miss our upcoming videos on advanced mortgage strategies. Next, I want to hear from you. What's the biggest mortgage myth you've ever heard? Or what strategy has worked for you in the past? Drop your thoughts in the comments below. Let's keep the conversation going. And finally, if you're ready to dive deeper into the world of real estate investing, click the link below. We've got exclusive deals and resources that are not available anywhere else. It's time to level up your financial game, so don't wait. Take action today and build the future you deserve. See you in the next video.